Have you ever pondered what the future value of Tesla stock will be? Will its value surpass certain nations' GDPs? Will its market capitalization surpass that of all other automakers combined? Is its value going to surpass that of the entire cryptocurrency market? Come along as we reveal Elon Musk, the CEO of Tesla's hidden stock prediction. Though this was an earnings call, we're used to the sort of Musk we see on X, who kind of dips into everything. What key lessons did you learn from this? Oh my God, what a disaster this was. I'm sorry for him. It doesn't excuse him from acting like Trump on Twitter, obstructing the SEC or the European Union, and, quite simply, acting like a baby on the earnings call. Yes, he is dealing with a lot of issues right now, including legal disputes and custody battles for his children. People are unaware of what is actually difficult. Prototypes are easy, but manufacturing is hard, which is why. Some believe it's just the concept, or that you just design an automobile by creating a prototype, but this is untrue. Not everyone is capable of creating an automobile. It takes work to develop a prototype, and it does take taste. However, the challenge of producing a prototype in large quantities is 10 times more complex than creating the prototype in the first place. Achieving positive cash flow is then significantly more difficult. Elon Musk recently disclosed Tesla's 2030 stock price objective, claiming that the company's shares may reach absurd heights in just 7 years. 2010 saw the commencement of Tesla's IPO. One of the best performing stocks on the market, Tesla's stock has increased by more than 28,000% since the firm went public, when it was trading at about a split-adjusted rate of $5. In this video, we'll examine the potential outcomes and projections offered by Elon Musk and prominent proponents of Tesla, such as Ross Gerber, and find out the real value of Tesla stock in just 7 years. So fasten your seatbelts and get ready for this incredible journey with Tesla. Kevin, no matter how you read Elon Musk's remarks, the EV industry is feeling the effects of them. You can see that shares of Tesla's rivals are currently declining, in part due to Elon Musk's recent comments that rising interest rates are stifling demand. Is this the entire tale? Yes, that's right. It's evident that rising interest rates lead to an increase in the cost of cars. The same holds true for property values. Now there are fewer purchasers. As there are fewer sellers when it comes to properties, there is somewhat less volatility. However, since everyone is making more cars, this is expected. But in this case, Tesla ought to be leveraging its advantages. Among all the companies operating in this difficult economic climate, Tesla stands out for its enormous profit margin per vehicle, enormous free cash flow, and the fact that it is the only pure-play electric vehicle manufacturer in the United States producing this kind of cash flow. There's a lot of potential. They're almost there with autonomy and with a groundbreaking new vehicle called the Cybertruck, which functions more like an exoskeleton than an internal vehicle skeleton. The Tesla team deserves praise for creating such fantastic products. Elon Musk made a strong remark about Tesla on the company's Q3 earnings call on October 18. This comment went viral on multiple news channels. He said, "We dug our own grave with Cybertruck." Taking advantage of this remark, a number of Tesla investors have made predictions that the company will soon face bankruptcy. To exacerbate matters, Tesla's stock experienced a sharp decline following the release of the company's third quarter earnings this year. But what these experts and bears miss is that while Elon Musk revealed where Tesla stands right now with its Cybertruck, he left out a few of the company's most important advantages. The forecast for Tesla stock in 2030 is based on this. Welcome back to Tesla Tomorrow, everyone. A few years ago, investors in Tesla were primarily concerned with whether the firm would be profitable. But as the business began turning a significant profit, that opinion was lately altered. With a net income margin of 10%, Tesla is projected to see growth as it expands. Tesla generated a net profit of $862 million in 2020, marking the company's first notable profit. In 2021, the amount increased to over $5.5 billion, and in the ensuing quarters, it exceeded $11 billion. In 2022, the automotive company's net income was $3.3 billion in the first quarter. In the next 2 quarters, it was $2.5 billion and $3.2 billion. Even while many argue that recent price reductions have had long-term negative implications on Tesla's margin and overall valuation, the automaker is set to report the same industry-leading margin. But is it possible that this is the case? Will Tesla be able to maintain profit margin? When it comes to luxury electric vehicles, Tesla has a strong brand. With no competitors and the largest market share in the luxury electric vehicle segment, the automaker enjoys an immediate competitive edge. In addition, Tesla leads the U.S. electric car market share and sells more EVs than any other manufacturer. Many Tesla bears also miss this crucial piece of information, and the more they choose to ignore the facts, the less optimistic they are about Tesla's future. The first and most crucial aspect about Tesla is that its leader is a capable individual. Elon Musk is renowned for his ability to pivot swiftly and with ease. In addition, he has cost reduction engineering abilities, which are extremely uncommon in engineers. This is the main driver of Tesla's future growth and the cornerstone of its innovation. In the early years of the auto business, both Tesla and other EV manufacturers were expanding. But Tesla has stayed ahead of these businesses and is now leading by a sizable margin. It will take years of consistent high revenue figures for firms like Rivian, Lucid, and NIO to realize the advantages that the automaker has to offer. The vehicle manufacturer has the framework required to be successful in the EV market. It has the largest global network of superchargers, which sets it apart from many other EV manufacturers. Additionally, Tesla maintains production facilities in the key markets for the sector. Tesla manufactures solar panels in addition to automobiles, which will significantly increase sales and profitability for the business. Currently, Tesla is regarded as one of the biggest solar installers in the US, and its solar panels are highly regarded in its markets. It's interesting to note that Tesla's entry into the energy industry complements the company's worldwide sustainability objective while also diversifying its sources of income. Tesla's commercial strategy aligns with its global efforts to mitigate global warming. As more nations adopt electric vehicles, EVs, and provide incentives for their adoption, the company's growth prospects in 2030 appear even more promising. Now for the really important question. How would a Tesla, for example, be able to earn enough money in 2030 to reach these absurdly high numbers? And what would the price of its shares be at that point? Assume that by 2030, Tesla has sold 12 million cars, earning $10,000 for each one, has a million bots, and can generate up to $65 billion from its fleet of robot taxis. At that point, Tesla's market capitalization will be around $6 trillion, with a P/E ratio of 25. Tesla has 3.5 billion shares available. Therefore, by 2030, the price of a share may reach $1,600. This is even before accounting for the value of Tesla's energy business. It is clearly clear that there will be a significant need for clean energy infrastructure in the coming years, and Tesla is in a good position to profit substantially from this growth in demand. Ross Gerber believes that buying Teslas and electric vehicles will likely be the most significant investment strategy of the ensuing 10 years. Long-term investors should be on the lookout for companies whose business models coincide with the numerous countries that are aggressively implementing sustainable energy solutions. Investing in Tesla and the EV theme in general should be one of investors' main priorities for the following years, especially in light of the anticipated increases in oil costs. The majority of nations with EV laws want to lower gasoline-powered vehicle emissions. Similar to how oil prices have fluctuated recently, 2030 may be a very successful year for Tesla and its investors due to increased innovation in the energy field and potential revenue from other ventures for the company. However, how did you feel about its stock at the time? Please share your thoughts in the space provided below. If you'd like to learn more about Tesla's recent activities, click the following video to view it on your screen. I'll see you over there.